Good evening, students. Welcome for the live revisionary virtual classes for your intermediate paper 3 taxation section A income tax law. For income tax paper students, it is very important to see for which attempt these classes are relevant because Finance Act applicability as your relevant assessment year, your cutoff date, everything will have an impact on the attempt which you are appearing for. So these classes, revisionary classes, is for January 2026 attempt. Why I am telling you this because we are already having a LVC for May 26 and there is a difference of Finance Act amendments. For January 26, the Income Tax Act 1961 as amended by Finance number 2 Act 2024 is relevant. So the Finance Act 2025 amendment or if any student has doubt about the new Income Tax Act 2025, that is not at all relevant for January 2026 examination. So your previous year is previous year 24-25 and assessment year 25-26. So in this revisionary classes, students, our faculty will take the question, try to clear your concept through the help of questions. They will take case scenarios, past year questions, RTP questions for your practice and try to make you understand the concept through that questions. So before these classes, this is the first class, but before these classes, please prepare for your topic for which class is there. Like for today, we having a class for basic concept and residential status, right, sir?
Yes.
So it is very important that before attending this class, you have done your study, your one set of revision, so that you can understand whatever the questions are is taking, whatever the concepts are trying to helping you to clear the concept. Because if you have not studied yourself first and you have not revised yourself and you are directly just doing this class, then it will not serve the purpose for which these classes are. Okay, schedule is already hosted for on the website. Accordingly, plan for which date the which topics are will be taking and prepare that topic beforehand and collect your all the doubts, whatever the doubts you have in related to that chapter. Collect all the doubts and our respective faculty will take the doubts. For January 26 students, we have one fortnight program also. This is a series of sessions and it is being started from today for final paper. For intermediate, it will be starting from tomorrow. So what is in the this fortnight program? This is a continuation program. One day that is one subject for final, second for intermediate. So today it is started for final. So tomorrow it will be inter paper 1, then again next day final paper 2, then alternatively intermediate paper 2. So this is for January 26. In this, faculty will guide you about the common mistakes, how you can strategize your study, how to plan. He will motivate you also, and what the approach you should follow to get success in your January 2026 examination. This flyer also I just want to share my screen because many student has doubt ki ma'am how to join that. In the other live virtual classes also students are asking ki how to join or where we can find the schedule also for this. So I'm just sharing my screen. This is the BUS knowledge portal and I'm hoping each and every student should be familiar of this BUS knowledge portal because all your study material, RTP, MTP, everything is there in the BUS knowledge portal and the BUS mobile app. So if you are not aware, kindly make a practice to visit BUS knowledge portal regularly to get the updates ki what is happening and what is the BUS doing, the what is BUS initiating is taking the initiative for the students. So this is the flyer students for the fortnight program. Schedule is already given like it for paper 1 that is tomorrow 12th November and it will be from 3 p.m. onwards. So basically 3 to 5 p.m. If you want to join through your mobile, then QR code is there. You can join for intermediate QR code and for final QR code. If your any friend or relative or some known is there for final, you can tell them also. If you want to join from the desktop, because students are asking this query also in the other classes, ki ma'am how to join from the desktop. So there is a registration link without the QR code, intermediate and final. So just click on the intermediate registration. You have to fill your basic details, your your registration number, mail ID, mobile number, and all these things. And after that, you are registered and you can view this class, this thing. But student, this fortnight program is very, it will be very useful for you. And for that, you will not have the recording. So it is very important to attend that live only. You can ask your you can ask your query in that option also, but that on that recording will not be available. So you have to attend that through online only. So now I just uh, welcome Ankish Sharma sir to take the session and to start the session.
Sure, ma'am. Thank you so much, ma'am. Good night. So, welcome, students. Namaskar. I hope you all are doing good and you are, of course, studying very hard to achieve the goal of your life to become a chartered accountant as soon as possible. So, these classes are for revisionary purpose. And in today's session, we will be discussing Chapter 1 and Chapter 2 provisions, the problems, the last attempt question paper, September 2025 questions, which is connected to Chapter 1 and Chapter 2. I am going to solve it for you. May 2025 questions of Chapter 1 and Chapter 2 also. We are going to solve those questions also in this session. And there would be some MTP question, RTP questions, and case scenario. And of course, I am going to ask some question from you also. I want to see how much prepared you are for your examination. So I believe that you are here and you have already revised the basic chapter number 1 and 2 concepts. So if you want to ask something, you can send your messages in chat box. You can raise your hand. So if you want to ask something, I can ask the technical team to unmute you also. But Golika is saying good evening. Good evening, everyone. Once again, I welcome you all in this session. I'm C. Ankit Sharma, and we are going to discuss Chapter 1 and Chapter 2 revisionary classes. So first of all, a very interesting question for all of you. I want to check what exactly you are up to, how's your preparations are going. So this is a question which is very tricky. So please read it very carefully and then only give me the answer. So my question is this. This is related to, of course, basic concept chapter. Like in basic concept chapter, the provisions are part, you can say we can bifurcate that chapter basic concept into 3 parts. First is introduction part, in which there are definitions, the basic concept of income tax, how it has been applied to our country, why income tax is there, what is the legal constitution of income tax, of applicability, definition of person, definition of income, concept of income, etc., etc. So the whole picture of income tax has been described in this introduction part, which is basically theoretical, like black money concept, previous year, assessment year. The other part is regarding rates of taxes, and those are basic rates of taxes, because we have already gone through with income tax all chapter ones. So this rates only summarize between normal rates of tax structure. We have 2 regime, optional tax regime and default tax regime. So technically the chapter 1 rates related to the basic rate structure, which is applicable on person wise, like slab rate in case of individual, HUF, AOP, BOI, AJP, then rates for partnership, firm, LLP, but no rates which is specified for a special rate of income has been prescribed in this concept in detail, like section 111A rates, section 112A, section 112 casual income rate, etc. These actually has been discussed in detail in the respective heads in which they fall. So basic rate structures are there, then surcharge concept, which is separate provision for surcharge in case of default tax regime and optional tax regime. There is only one difference. If from the point of view of surcharge, I am talking, there is only one difference in respect of rate of surcharge in optional tax regime and default tax regime. Can anyone tell me what is the one difference between the optional tax regime surcharge and default tax regime surcharge provision under chapter number 1? Can anyone let me know what is the difference? The single difference regarding surcharge provisions are there in case of optional tax regime and default tax regime. Let me see. Somebody answer. Almas is saying no 30% in default tax. Exactly. Vilika is saying 37% above 5 crore is not there under 115 BAC. Under 115 BAC, what is the maximum rate of surcharge? It is maximum 25%. Absolutely correct, Almas. There is no 37% rate applicability in case of surcharge under default tax regime. Correct, Manju. Correct, Gayatri. Exactly. That's my point. So surcharge provisions are quite complicated, but technically they just talk about the provisions of applying tax on tax. Uh, Tanmay Sastri saying, how many questions come from this chapter? Like Tanmay, there is no hard and fast rule that this much of question would be framed from basic concept, but generally I believe from chapter 1 and chapter 2, there would be at least 7 to 10 marks provision would be asked. And chapter 1 is very, very important. Individually 7 or 8 or 9 marks provision could be asked from these chapter 1 and 2, but chapter 1 is for applicability of rates of taxes, surcharge, rebate provisions and cess, and that is going to be applicable in every cases when there is calculation of tax applicable. So it is not that chapter 1 is only 7 or 8 marks. When there is a question of calculation of gross total income and total income and tax liability, so indirectly chapter 1 provisions also applicable in that case. So chapter 1 is applicable as individual chapter 1 and chapter 2 almost 7 to 8 or 9 marks, but in the main questions of calculation of tax, of course chapter 1 is indirectly applicable there also. So surcharge rates are multiple surcharge rates, and surcharge rate has been changed according to the total income and if special income of tax has been included. So I believe you must have gone through with those rate in which if your income including 111A income, 112A income, 112 and dividend, then surcharge provision slightly changed. So these are rates provision in the technical second part of basic concept. Rebate concept also there, and cess 4% education and health cess also applicable. Rebate is 12,500 rupees in case of optional tax regime. Under default tax regime, it's 25,000 rupees. But there are two concepts, up to 7 lakh rupees, 25,000. And if your income exceeding 7 lakh rupees, then also rebate could be applicable up to 7 lakh 22,000, that much amount of rupees that we have already discussed in the basic concept chapter. The third part of the basic concept chapter is agricultural income. And this is like first part introduction is basically connected with the theoretical provision. And of course, it does not mean that it is not important. Theory is as much as important as numerical. So it creates a foundation, it creates basic background to interact with the income tax. Because if you do not know about the previous year assessment year, if you don't know the definition of person, if you don't know the definition of income, black money concept, etc., it would be very difficult to understand the practical solution of question. So introduction part is a foundation, theoretically based main. Rates actually topic is connected with numerical provisions, but agriculture income is having both concept, theoretical as well as numerical. In numerical, there are concepts like integration. There are concepts like composite business, etc. So this is the main component, or we can say ingredient of the basic concept chapter. Now my one question to all of you, and I want to see who can give the answer of this question. Only that student can give the answer of this question, in my opinion, who's actually understood the provision correctly. So my question is this: is this possible? Read very carefully. And please, before giving the answer, please understand the question, then think about the provision, and then only try to answer it. Okay, so let me see who can do this. And I can bet you, you can ask this question to your friends, and 90% or more maybe going to give the wrong answer. Let me give you the question. Is it possible that surcharge and rebate can apply in same question? In same question of calculation of tax. So please do not give me the answer immediately, because this is not that simple question. So is it possible that surcharge and rebate can apply in the same question for calculation of tax? Like rebate would be end after, like, let me give you the question. Suppose it's an optional tax regime. Is it possible? Is it possible that in the same question, rebate applicable and surcharge also applicable? Is it possible? Because rebate would be applicable till if income is up to 5 lakh rupees. After that, rebate cannot be applicable. And surcharge would be applicable only if income exceeding 50 lakh rupees. So is it possible that in the same question, surcharge and rebate both can be applicable? Let me see from the chat box. Prem Kumar is saying no surcharge, only on after 50 lakh. Miss SH is saying no. Ishan is saying yes. But if you are saying yes, you have to tell me, Ishan, how it's possible. Because rebate cannot be applicable in case of optional tax regime after 5 lakh. And surcharge would be, Gayatri is saying marginal leap concept. No, 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 not in marginal leap. It won't be possible. When Ishan Vadagama, while having special category of income, no, Ishan, it won't be possible, because if in special category rate of income, automatically surcharge would be applicable if the income exceeding 50 lakh. And once your income is exceeding 50 lakh rupees, you cannot claim the rebate. Rajveer Ray is saying no. देखो एक बात समझो, listen very carefully. If I have asked this question, is it possible that surcharge and rebate can apply in the same calculation of tax question? So answer would be yes. That's why I'm asking you. So no could not be the answer. If it would be no, why I'm going to ask you this question? So there must be something. There must be some scenario in which surcharge and rebate both can be applicable. That's why the question is here. So the answer, of course, it's yes. That's why the question has been asked. But you have to find out how and when. If in normal case, you will think about it. So this is correct. That rebate would be applicable. Rebate applicability up to 5 lakh. That means if total income exceeding 5 lakh, total income, that includes special rate income, all kind of income. So if rebate apply up to rupees 5 lakh rupees. So if income exceeding 5 lakh, no rebate. Clear? And surcharge would apply only when total income exceeding 50 lakh. So if total income less than 50 lakh, there would not be any surcharge. Prem Kumar is saying yes, in case of casual income. How it's possible that surcharge would be applicable in case of casual income, Mr. Prem? How? Surcharge would be applicable in case of casual income also when that is exceeding 50 lakh. And if it is exceeding 50 lakh, how you can claim rebate? There would not be rebate. So casual income, special rate of income, that is wrong answer. And let me tell you, the answer of this question lies in chapter 1 provision. Your casual income, special rate of income, those provisions are in capital gain income from other sources. We do not need to go there because this is chapter 1 we are discussing. So whatever problem, whatever query I am asking from you, that would be related to chapter 1. Gulika Berwal is saying agricultural income. How it is possible, Gulika, in case of agricultural income? You can explain if you want. I can unmute you, but if you can write down in short in chat box, then I also can tell you whether your answer is correct or not correct. Rohit is saying income from agricultural. How, Mr. Rohit, it's possible in case of agricultural income? So, Mr. Prem Kumar, yes, in case of undisclosed income. No, no, not in case of undisclosed income. Undisclosed income cannot claim any exemption, any rebate, nothing, not allowed. Not a correct answer. No, sir, I can't. I'm guessing only. So this is not guessing work. If you are sure, if you can identify the provision only, na, then only we can answer. So if you are thinking it's casual income, so it apply that concept. Or if you are thinking it's agricultural income, you have to apply whether this could be apply or not. So if it is not, our brain is not able to applying it, then that cannot be the answer. Rohit is saying income from agriculture. So there is cases. And let me tell you, this is a very interesting question. You can ask to anyone, and 90% or more, or maybe 99% person cannot answer this question correctly, I believe. Okay, Miss Kavya is saying, opting any specific section where there's no, I will not ask any specific section which is not in your syllabus. I'm saying this question answer lies within chapter 1 provision we have already discussed. But of course, we have not discussed this way because this is a different kind of question. This is just to make your brain think out of the box. But how it's possible? Now let me show you how it's possible. So this is possible in case of integration provision. Integration of agricultural income with non-agricultural income. You can ask this question to any of your friend or to whomsoever it may concern. Anyone you can ask. And I can bet you 99% or even 100% cannot answer it. So you are going to find something, you are going to learn something today, which I believe not even 1% knows who is even doing CA. And those are in CA final also, maybe. Okay. So how it would be possible? Let me tell you how. So in case of integration, there is some condition you have to fulfill. It is applicable only in case of individual HUF, AOP, BOI, and AJP. Clear? The second condition was agricultural income must exceed how much? For applicability of integration provision, how much income must exceed the agricultural income? Absolutely right, Prem Kumar and Ram. It should be more than 5,000. And the third condition, non-agricultural income. How much this should exceed? Exemption limit, absolutely right. Basic exemption limit. So in case of optional tax regime, that must exceed 2,50,000 or 3 lakh or 5 lakh as the case may be, or in case of default tax regime, according to that, 3 lakh rupees. So it should exceed the basic exemption limit. Absolutely right. Now, if the agricultural and non-agricultural income is there, and if all these three conditions has been fulfilled, so how we calculate tax? Step number one. Step number one says you have to calculate tax on agricultural plus non-agricultural income, correct? Whatever would be total of agricultural, non-agricultural, calculate tax on this as per normal provision of the act. Okay. Now step number two. Calculate tax on agricultural plus basic exemption limit. Add these both income, the basic exemption limit and agricultural income, and upon this calculate tax normally. So we do not need to calculate tax as per any special provision. Suppose these are my income and we have to calculate tax on it. Now step number three. It says step number one minus step number two. This would be my tax liability. Step 1 minus step number 2. Now there is a provision which says rebate would be applicable after step number 3. And rebate would be applied depending upon, listen very carefully, rebate would be provided depending upon what is your non-agricultural income. in this information, whatever is your non-agricultural income, on the basis of that, we will find out whether rebate is applicable or not. So technically, if your non-agricultural income is up to 5 lakh rupees, in case of optional tax regime, you can claim the rebate. And rebate would be, of course, the amount of tax or 12,500 rupees, whichever is lower, you can claim. So the tax or 12,500 lower you can claim. So these are rebate provision, but in case of integration, rebate would be depend upon your non-agricultural income. Understood? These are the provision. We are not doing anything new. We are not going to, I'm not going to teach you any new concept. This is already we know. Okay. Now let me show you how it's possible. Now, suppose my agricultural income in the question is 48 lakh rupees. And my non-agricultural income, suppose 4 lakh rupees. So all three condition has been fulfilled. This is Mr. A, individual, optional tax regime. And if question asked you calculate the tax. Now you know what will happen. Step number 1, you have to take both income for purpose of calculation of normal tax. So when in step number 1, you will calculate tax on 52 lakh rupees income. So there would be tax. And because this income exceeding 50 lakh rupees, so there would be 10% surcharge also. Whatever tax on 52 lakh, you have to apply the surcharge also. This would be your step number 1 tax. Surcharge applicable, you can see that. Now step number 2. Step 2 will say tax would be calculated on agricultural income, 48 lakh, and the basic exemption limit, 250. So that means now you have to calculate tax on 50 lakh, 50,000. Again, in this case, there would be tax and 10% surcharge. Now see the impact of third provision. Now step number 3 would say 1 minus 2. Whatever tax is there, whatever tax. Suppose the tax is difference of tax 1 minus tax 2. Suppose it's 40,000 rupees. Now rebate concept will be there. And it will say, if your non-agricultural income is less than 5 lakh, you can claim rebate in this question. And how much is your non-agricultural income? 4 lakh only. You can claim rebate up to the amount of tax or 12,500 rupees, whichever is lower. Then cess would be applicable. So you can see in this case of integration, surcharge also applicable for the purpose of calculation of tax in the same question. And rebate also has been provided because rebate depends upon non-agricultural income. And surcharge would be applicable because as per step number 2 and step number 1 and 2, we have to apply calculation of tax, assuming that income is a normal income. So because it's exceeding 50 lakh, surcharge need to be applicable. Understood? So that was the case. Very interesting. And as I said you, this is very rare to understand, but you can see this is the beauty of the provision. Normally, nobody can think about it that surcharge and rebate could be applied simultaneously because the provision are exclusive, 5 lakh and 50 lakh. But income tax is a very beautiful tax, and you can see how it can change those provision also. Mr. Sid is saying agricultural and exempt and can't be taxable. If you are only earning agricultural income, interesting. How beautiful this is. This is kind of knowledge which generally do not have anyone knows. That is it also possible? Yes, it is possible in this case. So let me ask one simple question from all of you. Suppose an SSC gross salary. An SSC gross salary is 5,50,000 and 4 rupees. If his gross salary is 5,50,000 and 4 rupees. Suppose this is a 1 marks question for the purpose of examination. And he is under optional tax regime. So can he claim provision? Then you would be able to find out the answer. So can that person can claim rebate or not? Gross salary 550. So there would be a standard deduction of 50,000. After that deduction, the net salary would be 5 lakh 4 rupees. And if it's 5 lakh 4 rupees, suppose there is no other deduction, 80C. This is his gross total income. 5 lakh 4 rupees is the gross total income. So if your gross total income is 5 lakh 4 rupees, are you eligible to claim the rebate of 12,500 or not? Or you have to pay tax? Suppose if I say your gross total income is 5 lakh 4 rupees, and I will ask you to calculate tax on it under optional tax regime. So either would be any tax or not. Gayatri saying 1 lakh 25 not be any marginally in this case. That is for above 50 lakh. If your GTI, there is no other deduction, no ATC, no deduction. If your GTI is 5 lakh 4 rupees, so what would be the tax? Gulika is saying total taxable income 5 lakh, rebate 12,500. So because GTI is this one, Rajveer saying correct, there would be rebate, there would not be any tax. Why? Because we have to round it off. When you will calculate total income, you have to round it off. Correct, Almas? And when we will round it off, it would remain 5 lakh rupees. And because it's up to 5 lakh rupees, there would not be any tax because rebate would be there. So even if you can say the provision says if your income is more than 5 lakh, so it's not income, it's your total income is up to rupees 5 lakh. You can claim rebate. So either your GTI is more than 5 lakh, only just 4 rupees exceed, you can still claim rebate because your TI is going to be round off into multiple of rupees. Okay. So those were the interesting fact I would wanted to share with you. Now we are moving on to the questions of examination. If you have any query, students, regarding any provision or any confusion regarding any provision, you can ask me. Else we are moving on to the question paper, September 25. This is question number 8 from September 25, which is related to basic concept and residential status topic. And you can see the question. So those have been give that attempt of September 2025 and not able to clear it. First of all, let me tell you, there is nothing to worry about it. Okay. That is only unsuccessful attempt, not failed. It is just unsuccessful. That means you are not able to clear in this attempt. That's it. Do not take the burden that I got failed. No, you would be fail only if you will leave this course. If you start giving your next attempt, just find out your weaknesses. Whatever your weakness, just try to remove those weakness. If you are able to do that, you would be able to clear in the next attempt. And there is no race. If your friend have been cleared the last attempt, if some junior has cleared the last attempt or your relative has been cleared your last attempt, so do not take the burden of that. It's your individual race. It's not a competition. You have to become a CA. It does not matter your friend, your relative, or anyone else has become CA before you or after you. It is your particular race and you have to finish it. Just believe in yourself that you will finish this race, whatever happen. So do not leave the CA. CA would not leave you. Understood? So do not take burden, do not take load on your brain that I won't be able to clear that attempt. There must be some, of course, flaws. There must be some weaknesses. That's why it happened. So, of course, just make sure that you are able to remove those weaknesses, revise provision, again, try more, practice more question, and you would be able to clear it. Do not worry about it. So, we are going to read this question. AP and Sons HUF is controlled by Amindra, the Karta of the HUF. Okay, fine. Amarindra, an Indian citizen, stays in country T. Got it? And regularly visiting India. my pen is not working over there because it's a specific Acrobat file. So you have to read this with me and I will solve it on the separate sheet. So you should understand the question. It is an AP and Sons HUF. It's controlled by Amindra, the Karta of the HUF. Okay. Amarendra, an Indian citizen, stay in the country T and regularly visit India. During the financial year 24-25, he visited India for 190 days and managed the affairs of the HUF. So why he came to India? To manage the affairs of the HUF. Understood? During the immediately preceding 5 years, he visited India for 70 days each year. And prior to that, he was in India for 185 days in every year. Residential status of AP and Sons for the assessment year 25-26 is. So question A is asking, you have to answer the correct option, whether it's resident and ordinary resident, non-resident because control and management, and resident because control and management. So there are four options and we have to find out the residential status of HUF. We are not concerned with the residential status of Amarindra. We just concerned about the residential status of AP and Sons. So let me solve this question for you. I will write it down. The basic information, AP and Sons, and we will solve it together. Okay. AP and Sons. That was an HUF. The Karta of the HUF is reside outside India in some country T. He is a citizen of India. I'm just writing down the important information from that question which has been given over there. He was visiting India in previous year 24-25. He visited India for 190 days to manage the affairs of HUF. So that means for the purpose of operation of HUF, to manage HUF affairs, HUF work. So because in case of HUF, if we need to find out the residential status of HUF, so what is the exact concept? We have to see the control and management. And if it is partly or fully from India, then HUF would be regarded as resident. And if completely, or we can say wholly outside India, the control management, that means business meeting or management, if it is 100% outside India, then that HUF would be regarded as non-resident. But because he comes to India for 190 days to manage the affair, so that means that is controlled from India. So HUF would be resident. The first instant, the HUF would be resident in India. And you know, if individual or HUF become resident, then we have to solve that question further to find out whether it is a resident and ordinary resident or it is in resident and not ordinary residents. For finding out the sub-classification of HUF, which is already regarded as resident, we have to find out the ROR. And for the purpose of being a resident and ordinary resident, that HUF needs to fulfill two conditions. And these conditions is applicable upon Karta of the HUF. And the conditions are, who has write down the condition? Okay, Gulika has write it down. HUF is resident, as control and management is partially in India for previous year. Okay, good. Now we have to see the status of Karta. If state Karta is going to satisfy both conditions, remember both these two conditions, then HUF would be regarded as resident and ordinary resident. If Karta would not be able to satisfy both conditions, then HUF would be resident and not ordinary resident. The first condition is he must be in India for 730 days or more in India in 7 preceding previous year. And second condition, he must be in India for at least 2 years resident out of 10 preceding previous year. So 2 years or more, he must be in India as a resident status he should obtain out of 10 preceding previous year. So if first condition should be fulfilled and second both, then ROR, otherwise RNOR. So we are checking the first condition first. So the provision was showing that in the last 7 preceding previous year, the Karta, Mr. Amrendra, in the last 7, during the immediately 5 preceding year, in 5 preceding previous year, he visited India for 70 days every year. So that means in 5 preceding year, he was in India for 350 days. And for 2 preceding previous year, he was in India for 185 days every year. So that means 370. So technically, out of 7 preceding previous year, he was in India for total number of days of 720. Tell me, student, is this condition has been fulfilled or not? To fulfill condition 1, he must be in India for at least 730 days or more. But you can see, as per the informations given, he is in India for only 720 days. That means this condition does not fulfill. And if this condition does not fulfill, do we need to check the second condition? Of course not, because both need to be fulfilled. And if first is not fulfilled, why do I need to check the second one? Because now the status would be only resident and not ordinary resident. Because if first condition has not been fulfilled, we could say now does not matter second fulfill or not. It does not matter anyway. So because both has not been fulfilled, he would be treated as resident and not ordinary resident. Who would be treated? HUF. We are giving the answer for HUF. HUF would be resident and not ordinary resident. So option D was the correct answer in this case. Now you can see resident because control and management of its affairs partly managed from India, and not ordinary resident because the status of the Karta is resident but not ordinary resident. I hope it's clear. Any problem in this? So you can see if you know the provision well and if you know how to apply them, then question and solution would be, of course, easy. In examination, what happened? Na? We are nervous. The problem is not, we do not know solution. That time foundation, that the atmosphere, the unpredictability of future, there would be some personal issue, there would be some family issue, there would be a lot of issue, and that pressure that actually create a different kind of mindset. So that is very dangerous also. But of course, this is how this, we can say, course is. If you are able to handle that pressure, then definitely you would be able to handle your other problem which would be there after becoming a chartered accountant. So this course just not about the knowledge. It tests your patience, your hard work, your struggle, your pressure, your knowledge, of course. But everything you have to came out of it. So you have to be very strong. That's why this profession has been made like this. So that's why we have that kind of respect when you say, I am a CA. Or even if you tell any of your relative that you are doing CA, they always say, oh, okay. And you can see if somebody is going to say, or anyone who is asking what you are doing, and somebody is saying, I am doing graduation, I am doing BCom, I am doing BBA, the person who is listening, he will say, okay. And when somebody will say, I am doing CA, the person is asking, they will say O. So there is a difference between okay and O. Okay is okay. O means you are doing something different. You are doing something extraordinary. So even if you are a student, you would get recognition. So suppose when you will be a CA, what kind of impact it takes upon someone else. So because they know it needs not only the knowledge, it needs a lot of pressure, struggle, etc. to become a chartered accountant. So that is what matter. And this O and OK, very huge difference. Very huge difference. So if you are not able to clear it once, does not make any difference. Does not make any difference at all. Once you will be a CA, you will be a CA for your entire life. So just forget about the past. Just focus about the future. After 2 months, there would be examination. You have to prepare for it. Okay. So now the second question is a descriptive question. Question number 2A. 2A. That is regarding Shweta, a citizen. This is the question which is related to our topic. Shweta, a citizen of India, okay, and she is a chartered accountant. Very good to know. She is a working partner in Shweta and Varun Associate, which was set up in Chennai. Got it. India, of course. She visits foreign country A quite often and provides accounting services to corporates. There in her individual capacity. In country A, she is not subject to any income tax. The details of her income for the financial year 24-25 is as follows. She is getting remuneration from her CA firm in India, which is 16 lakh rupees. Okay. Then income received from providing. So first of all, it's very important to read the question properly. Do not in hurry that, okay, I have read the starting point, now start solving it. No, not use. Just read the question, understand what is the requirement of question first. Then we will set up now what we have to calculate. So income received from providing accounting services in country A, received in a bank account in country A, that is 5 lakh rupees. Dividend from companies incorporated in country A and received in a bank account in country A, 8 lakh rupees. Income from a business in country A, which was set up in a country A but is controlled from Chennai, India. Received in country A, 7 lakh rupees. Ascertain her residential status. Okay, so first of all, they want to know what is the residential status of uh, Shweta. Ascertain her residential status along with the taxability of income for the assessment year 25-26. In the following independent situations, she did not visit India during the financial year 24-25. First of all, you have to calculate his residential status, her residential status, and the income, supposing that she did not visit at all in financial year 24-25. Second, she visit and stays in India for 200 days every year since 12 preceding previous year, including financial year 24-25. And third, on assuming that she did not visit India during the previous year 24-25 and her income from profession in India is 4 lakh for the financial year instead of 16 lakh. Okay, so got it. Now we are going to solve this question one by one. Let me open this question in my second system. So I would share the screen for the solution. So the information which has been provided in the first case, question number 2. In the first case, Shweta is a citizen. Let me write it down the important point. She is a citizen of India. She went outside India for visit. First of all, in any residential status question, you have to find it out. If that is the residential status of an individual, you have to find it out whether this related to the special cases or these are the normal cases. Special cases are that one in which someone who is citizen of India going outside India permanently for employment or as a crew member of a ship. In that case, 182-day condition is applicable. Or any person, any individual who is citizen or person of Indian origin comes to visit India, who reside outside India permanently, just come to visit India in this year. In that situation also, only 182-day condition needs to be checked. The third special condition, a person who is a citizen, person of Indian origin who reside outside India, come to visit India. And if he is having income from Indian sources more than 15 lakh rupees, then there would be two conditions need to be checked. 182 days or 120 days in the previous year and 365 days in 4 preceding previous year. Now she is a citizen who going to visit outside India. So that means she does fall for the normal case. Not any special case applicable. In normal case, there should be two cases more than equal to 182 days in previous year in India, or more than equal to 60 days in previous year plus more than equal to 365 days in 4 preceding previous year. Now option 1 or the first requirement to calculate her status as per the question on the basis that she did not visit India. Suppose she did not visit India in previous year 24-25. Even the third special condition case in which there she should be in India for more than 120 days and more than equal to 365 days. So all these conditions having some days should be in India. But as per point number 1, because it says she did not visit India at all, so she could not be a resident under section 6.1. Now we have to check section 6.1a, which is deemed resident. In case of deemed resident, visit is not mandatory. For the purpose of deemed resident, we have to check that what is her Indian source income, and she is not liable to tax outside India. So out of the information of income has been given in the question, the first income was 16 lakh rupees. And if Indian source income is more than 15 lakh, then section 6.1a provision would be applicable. 16 lakh would fall for that, and point number 4th, income, which says income from a business in a country A, set up in country A, but controlled from Chennai. That would also be regarded as Indian source income. So total income would be 23 lakh rupees for the purpose of checking this condition. And because it's more than 15 lakh rupees, she's a citizen of India, then she would be treated as deemed resident. Clear? And a deemed resident would be always automatically regarded as, what is the provision, student? Always it would be regarded as resident and not ordinary resident. Absolutely correct, Mr. Ram. Absolutely correct, Gulika. It would be regarded as always resident and not ordinary resident. And now on the basis of this, we have to calculate the income. And the income would be, of course, in this answer, only those two income needs to be considered, point number 1 and point number 4. So the total income would be 16 lakh and point number 4 income 7. This would be the total income if she would fall in category 1 solution. She would be a deemed resident and total income would be 23 lakh rupees. The second case was, the question says, suppose she visit India for 200 days every year from last 12 preceding previous years. 12 previous preceding years. So now it's very simple. She would be a resident and ordinary resident because she is fulfilling more than 182 days condition. In current year, she would be resident. After that, we have to check whether she is a resident and not ordinary resident or resident and ordinary resident. She has to fulfill any one of this condition, less than 730 days in 7 ppy. That is not possible because that would be 200 into 7. She would be in India for 1400 days. And she would be at least 9 years non-resident out of 10 preceding previous year. But she would be resident in all 10 preceding previous year because she was in India for 200 days every year. So in second case, she would be regarded as resident and ordinary resident. And students, if someone is resident and ordinary resident, what does that mean? All income needs to be taxed in India. Every income of the previous year needs to be taxed in India. And in the question, you can see there are 4 incomes has been given. Like first one is remuneration from her CA firm in India, 16 lakh taxable. Income received from providing accounting service in any country received anywhere taxable because you are a resident and ordinary resident. Dividend from any country received anywhere is need to be taxed. 8 lakh also to be taxed. And income from business in country A, which is controlled from India, 7 lakh also going to be taxed. So total income would be, of course, 36 lakh. 16 plus 5 plus 8 plus 7. Second case, that was 36 lakh rupees. Now the third case. Now it says, suppose she did not visit in the previous year. In the previous year, she did not visit at all. And her income from the firm, 16 lakh. Suppose it's not 16 lakh, it's 4 lakh rupees. Now, because she did not visit, so again, she would not be a resident as per section 6(1) provision. Same as per point number 1 we were discussed. Now, as per section 6(1)(a), to become a deemed resident, we have to check the income. And now this income is only 4 lakh and the 7 lakh. So total income would be, Indian sources would be 11 lakh rupees, which is less than 15 lakh. So this would be called non-resident. The third case, she would be a non-resident. And if you are a non-resident, which category of income is taxable? Which category of income can be taxed? In case of a non-resident, there are only 2 kinds of income which could be taxed if you are a non-resident. Earn in India, exactly correct, Sindhu, very good. And received in India. Only these income can be taxed in India. And out of those 4 income which has been given in question, first one is only which income which has been received in India, which was 16 lakh, but we need to take 4 lakh rupees as per the question requirement. Third point says consider it 16 as 4. So 4 lakh is there. Second income not received in India, not earned in India, non-taxable. Dividend not received in India, not earned in India, non-taxable. Not received in India, not earned in India. So technically 7 lakh also non-taxable. So the correct answer of third point would be only 4 lakh rupees. The total income would be 4 lakh rupees in this scenario. I hope it's clear, students. We see any query? Yes, Rajveer, absolutely right. Okay, so Golika is saying, sir, now clear. Absolutely, well done. Now moving on to the May 2025 question. In May 2025 question, there was a question. Let me open it for you. Just a second, students. That was question number 2A. Point number 1, 2, and 3. Okay, let me open this in this also. This is the question. Question number 2. We have to tell, state with reasons whether income chargeable to tax in India for the assessment year 25-26 in the hands of the recipient in the following independent situations. So these are independent cases, and we have to tell whether these are going to be taxed or non-taxed depending upon the fact of the cases. So first one, Mr. Mahesh received dividend of 7 lakh declared and paid by a foreign company outside India. Such dividend has been declared in respect of shares which derive their value substantially from the asset situated in India. He is resident and not ordinary resident in India. So please read this point number 1 carefully and let me know whether this should be taxable in the hands of Mr. Mahesh or not, and with a short reason. Status is resident and not ordinary resident in India. So how you would be able to answer this question correctly? You have to think it that he is a resident and not ordinary resident. So first of all, apply the provision. Just think about it that in case of resident and not ordinary resident, what kind of income can be taxed? And if that income which is given in point number 1 does fall in that category, then we are going to tax it, else we will skip it. Who will answer that? It's simple. Ishan is saying received outside India, non-taxable in case of resident and not ordinary resident. Okay, Ishan. So does it make no difference that the dividend has been declared in respect of shares which derive their value substantially from assets situated in India? Does it not make any difference on the taxability? Sindhu is saying taxable since it is a deemed income. Very good, Sindhu. Anyone else? Ishan is saying that is applied to the foreign company for taxing its income. So according to you, not taxable in this case. Okay. Anyone else? Mrs. Gayatri is saying asset situated in India, taxable in India. Okay, very good. Section 9 deemed income, sir. Mr. Ram is saying, I just wanted to know whether this does fall in the category of those income which is taxable for a resident and not ordinary resident in India. You have to think about the provision. Then I will answer, of course. Rajveer is saying on query portal, no, as dividend is received from foreign company outside India and asset is in India is irrelevant. Okay. Gayatri is saying any property or asset situated in India, so taxable. Karthik is saying non-taxable. Okay. Anyone else? Dividend will be taxable in the hands of a company. No, Kavya, this is not the question. Question, would it taxable in the hands of Mahesh or not? I'm not asking where it's going to be taxed. That is not the question. So do not go off the track. Just need to answer regarding this. And the correct answer is it's non-taxable. Students, you must have remembered and believe you know the provision that we are talking about a resident and not ordinary resident. Only 3 kinds of income can be taxed in case of resident and not ordinary resident. Received, deemed to received in India. Arise, or we can say earn, or deemed to arise or earn in India. And third one is if business control from India. Now you can see in the example that is not controlled from India, not received in India. And you might get confused because a special kind of case has been given in the question that the part of shares has been invested in the substantial property of India just to make you confused. Have you ever heard this kind of provision in chapter 1 or 2? That on the basis of investment of the property of that company in India, etc., the dividend is going to be taxed in your hands. You can go through with the definition of arise or deemed to arise or deemed to receive. There is no such point has been included. It's just our overthinking. I have just pointed out that okay, there are shares which has been invested in Indian asset. How does it matter? There is no provision. We are not discussing any general subject like organization and management or marketing. There are no rules. Depends upon the circumstances. They change the rules of marketing. They change the rules of management. We are actually reading an act. An act means law. Law means we cannot change it. We have to obey it. Whatever is there. So, is there any concept you have ever read in the provision? Ever? Those talking about that dividend has been would be taxable on the basis of the substantially asset invested in the country. Have you ever read this kind of provision anywhere? And of course, your answer will be no. 100% will say no, we did not read like that. So if you did not read like that, then believe in yourself. Believe that there is no concept like this. So I would answer on the basis of my provisions. Why do we need to use those information which we do not rely about it? It just because maybe in the examination hall, someone, your student who is sitting nearby, he or she must say, no, this would be taxable because I have read somewhere substantially asset investment it needs to be taxed. At that point of time, we lose our confidence. We thought he or she is right. Why? You are right. You are responsible for your studies. You are responsible for your examination. You are responsible for your result. So be confident about it that if you have gone through nicely, if you have revised the provision correctly, and there would be some information which you must not have encountered when you are reading the concept. So that means it just may be to confuse you. So there is no as such concept. The concept was simple. If any Indian company shares, debentures, interest, or dividend received outside India, that would be deemed to arise in India. This is the concept. There is nothing like when their assets are situated, that is just to make you confused. So this is not going to tax in the hands of Mahesh. Not received in India, not arise in India, not controlled from India. Understood? Chalo. Second, Mr. Shivan, because Rajveer exactly gave the correct answer, that information is irrelevant. Mr. Shivansh is a non-resident in India and residing in China, has deposited 16 lakh with Messrs. ABC Limited, an Indian company, on 1st September 2024. He has received interest at the rate 12% per annum in China during the previous year 24-25. So now he is a non-resident. Now you have to tell whether this is going to be taxed or not. Read this provision and let me know. And because Shivansh is non-resident, so you need to stick only 2 points. If income received in India, taxable. If income arise in India, taxable. Now you have to understand, does this information or does that income falls under arise or deemed to arise, received or deemed to received case? If yes, then that would be taxable in India. Specifically, it has been written that received outside India. So now only thing you need to check is whether it's arise or deemed to arise from India. Now Sindhu is saying, Priyam is saying taxable in India, accrue or arise. Very good. Then Sindhu is saying taxable because earned in India, since the interest earned is given by an Indian company. That's why Karthik, absolutely correct. Because the income has been flow by an Indian company, whether interest, dividend, etc., paid by an Indian company outside India, it would be automatically deemed to arise in India. Well done. So that is taxable. Almas also saying correct. Taxable. Ishan also said taxable correct. Golika also said taxable. Well done. Rajveer also said taxable. Good to see the correct answer of all of you. So you have to calculate interest from September 24. It would be 1,12,000 rupees. September, October, November, December, January, February, March. So 7-month interest on 16 lakh at the rate of 12%. That would be 1,12,000 going to be taxed in the hands of Mr. Shivansh. I hope it's clear. Okay. Moving on to the third point. Mr. Ramesh received royalty of 8,25,000 in consideration of providing patent rights to Mr. Sunil. So payer is Mr. Sunil and payee is Ramesh. So Ramesh is the person who has received the royalty in response of transferring of patent rights. Mr. Sunil has developed a new product in India by utilizing the patent rights. So the Sunil to whom we have provided the patent, he has developed a new product from that patent which has been provided by Mr. Ramesh. And where the product has been developed, where the patent has been utilized in India to develop a product. 30% of the royalty was received in India by Mr. Ramesh, of course, and 70% was received outside India. Ramesh and Sunil both have status of non-resident. So what would be the taxability of point number 3? Whether it's going to be taxed in the hands of Ramesh, 8,25,000 or 30% or 70%. So you have to answer according to the information given to you. Full taxable, 30% taxable, no taxable. You have 3 options. Karthik is saying fully taxable in hands of income since the income is earned in India. Why it is earned in India, Karthik? What is the reason? Why you are saying income earned in India? What Mr. Ramesh has done? Ramesh did not do anything in India. Anyone else? Ishan is saying Ramesh being non-resident, 30% taxable as received in India. Okay. Anyone else? But Sunil developed the product in India, according to Mr. Karthik. So according to you, full amount is taxable. According to Karthik, according to Ishan, 30% is taxable. Sindhu is saying 30% taxable. Okay. Anyone else? You know, there is a specific provision for this kind of concept under basic concept topic. Exactly the patent provision, the royalty provision is there and is specifically written what needs to be done in this case. Miss Zainab Praveen, she's saying full amount should be taxable. Okay. Anyone else? Almas is saying full taxable. What is the reason, Almas? What is the reason why we should tax that full? What is the reason behind it? Rajveer is saying 30% would be taxable. So, Almas, why full taxable? Or Miss Zainab, you want to tell why this full amount needs to be taxed? Vilika is saying taxable as the business is developed in India by a non-resident and paid to a non-resident. Okay, I understood. Anyone else? Ishan is saying in case of Sunil, full taxable as arise in India. But Sunil is the payer. We are talking about from the point of view of Ramesh. Why in case of Sunil? Sunil is not receiving anything. You are confused, I guess, Ishan. Utilization of patent in India, so fully taxable in India, according to Kavya. Yes, that's the correct provision. Zanib is saying received in India. No, Zanib, received in India is only 30%, and you are saying full taxable in India. So let me show you. A very simple provision regarding this concept has been discussed in chapter number 2. It says if there is a non-resident who is outside India, who is Ramesh in this case, is receiving royalty, is receiving interest, is receiving fees from India against royalty for any patent or lease, etc. interest for any loan which has been provided to India or fees against any services. So if any non-resident receiving royalty, interest or fees against patent, loan or services provided in India from Indian government, then always as deemed to arise in India. So if payment of royalty, interest or fees has been made by Indian government to any non-resident outside India, that is going to be deemed to arise in India and fully taxable. If it is other than government, whether the payer is non-resident or resident, then we have to see where that patent, loan or service has been used. If that patent, loan or service has been used in India, then whatever amount of royalty, interest or fees paid would be as deemed to arise. And that would be taxable. If it is used outside India, then not deemed to arise, non-taxable in the hands of non-resident. In our case, the payer utilized that payment for development of the product in India. So that means it is deemed to arise in India. He paid 30%, he received 30% in India, Ramesh, does not make a difference. Whether he did not receive a single penny in India, still full amount is going to be taxed, because this concept, this provision does fall in deemed to arise in India, because the patent has been used in India for the development of the product. If in the question it has been mentioned that patent is used only 30% part in India and 70% patent used outside India, then only 30% we can tax in India. But because it has been written that the patent has been used fully for development of a product in India, then whatever amount received outside India does not make a difference. Full amount taxable in the hands of Ramesh. I hope it's clear now. Anirudh is saying unable to join. Why, Anirudh? I don't know. Any problem in this solution, students? I hope it's clear now. Gayatri is saying clear, Ishan is saying clear. Well done. So these are exams questions what we are discussing, and I believe if these kind of question comes in the examination, then it's difficult to solve due to the pressure, due to the nervousness, due to other factors also. So you have to be very relaxed. Trust upon your knowledge. Believe that you have read the complete provision, and that confidence will build up only by one thing: revision. The more revision, the more practice you will do, you will be more confident. It's not important in the examination that you are able to solve that question. It is not that important. It is important that you have to solve that question in the within time. If this kind of question in the examination, and if you are taking 15 or 20 minutes to solve this kind of question, that means this is not up to the mark, because in 3 hours we have to solve that paper. So that is also very important. I believe there would be a lot of students who knows the answer but won't be able to solve the full paper in those 3 hours. So that's a problem of time management. So you have to be very, very cautious about that thing, that within a certain time we have to solve certain number of questions in the examination also. And your speed should be fast enough to solve those questions in examination. And how it will be happen? It's only possible with practice. The more question you will practice, you would be able to solve those questions in the examination in less time. And that will increase your confidence in the examination. And that is very, very, very important. Suppose you are practicing a lot of questions, and out of those questions, 5 or 6 questions similar to those questions has been asked in the examination. So what will happen? One benefit, you would be able to solve those questions easily in the examination. And the second benefit, which is invisible, you would be able to solve those questions before time. So you will have a lot of time remaining for other questions. That is also a very important thing. And let me tell you, if you are going to solve all questions of your study, illustration, test your knowledge questions, MTPs. There are, I believe, 8 MTPs. So there are more than 100 questions for each subject there. There are case scenario, 25 case scenarios, and there are multiple questions for each case scenario. So technically 25 questions, 4 or 5 cases in each case scenario, more than 100 questions over there. Then RTP, then 2 or 3 attempts old provisions questions. So we are talking about a sum of more than 200 or 250 questions. And let me tell you, if you are able to solve those questions, I can assure you there is a very high probability, more than 80% probability that you will definitely going to clear that group or paper whatsoever, and with very good marks. So this practice has no other option. Practice only makes you more perfect to appear in the examination, to come over that nervousness, to build your confidence, to solve the question, to time management, everything. So please do practice as much as you can for numericals, for theoretical, both things. And please go for MTP, RTP issued by institute. You can practice that. Uh, Make a timer at your home, take that paper print out and try to solve it within 3 hours. Before examination, you should try these things. Maybe you will feel it is not worth it, but let me tell you, this is something which cannot be replaceable by any other thing. Even if you are revising provision 10 times, and if you only try to solve those 3 or 4 MTPs, that would be more than that. The result, the benefit is more than that of 10 or 15 time revision. So you have to practice by writing. It will increase your speed. It will definitely going to help you in examination. I believe you would do that. So time for a short break, students. So we will go for a short break of 10 minutes. And when we will resume, we will solve some MTP, RTP, and case scenarios. Mr. Bhargav, can we have a short break? Ajit ji is here. Technical team, can we have a short break? Hello. Bhargav ji, can we have a short break? Actually, आप वहाँ पर okay. Okay, thank you. So, Bhargav ji, can we resume? Welcome back, everyone. I believe you must have your tea, coffee, etc. So we were discussing the provision of basic concept, the revisionary class of basic concept, and residential status, in which we have solved a question paper for September 2025. Those questions which is relevant for chapter 1 and 2. And also we have discussed May 2025 question paper, in which there was question which was relevant for chapter number 1 and chapter number 2. Okay, Anirudh is saying, hello sir, in mocks, currently I am in the range of 40s. I want to score 70 to 80 plus in tax as I am aiming for a rank. Is it possible to receive your personal guidance? Sorry, Anirudh, no personal guidance can be provided because we are, as a BOS faculty, can only provide you guidance on this portal. Personal guidance is not possible, but I want to tell you that all the best. And I can tell you, if you'll work hard and do practice, definitely you can score that. So then please give tips to improve my score. I have just discussed with before the break that how you can score good marks in tax or in any subject. So you can scroll back the video and you can see that. Moving ahead, now we are going to solve some question from MTP. And this would be over here. Manisha, a researcher, correct. So these are MTP question we are going to discuss in this class. So these are the kind of question that can be asked in the examination. So you can see Manisha, a research scholar, and in my opinion, this is a very, very good question. Very, very good question, which is connected to your basic concept and residential status provision. This is a very interesting question. This is mainly concerned with your residential status and incidence of tax concept. So Manisha is a research scholar pursuing her PhD. So the first thing, very important for every numerical, that you have to understand the requirement of the question. What is the requirement? What question actually wants from us? Without knowing that, if you pursue to solve that question, that would be maybe a waste of time, that would be result in a wrong solution. So understand the question first before answering or before start answering it. So Manisha, the research scholar pursuing her PhD, she is unmarried and her parents are living in Ahmedabad, Gujarat. Her parental grandparents and other family relatives are staying in South Africa. She was in India with her parents till May 2020. After then, she went to London for further education. In October 2023, she returned to India. On 28th March 2024, she traveled out of India to Johannesburg in South Africa for her research project and Khadi business exhibitions. She returned on 1st October 2024. So my previous year is 24-25. Clear? So in my previous year, she comes to visit India on 1st October 2024 technically to participate in the 150th birth anniversary celebration of Mahatma Gandhi. In this connection, she attended numerous events held over India while also holding exhibition for textile, etc. The fabric that breathes, etc. So these informations are irrelevant, of course. We can see there is nothing which is relevant for from the point of view of question. As showcased by Mahatma Gandhi, she won accolades and awards, gifts and donation, and the details of that donation, etc., has been given below. Scholarship for pursuing her research work. She has get this gross asset for exhibition in South Africa and collaboration with leading fashion houses. Gross asset from exhibitions held in India. Gross asset from sale of honey in the exhibitions in India. Gross asset from sale of handmade khadi designer etc. products. Gift from father's sister whom she visited in Johannesburg, South Africa. Cash gift received from friends in Gandhi Gujarat Seva Samaj, with whom she stayed within Johannesburg, South Africa. Received share of income from the HUF. Cost of material for exhibition. So the gross receipt which has been given in point number 2, 3, 4, 5, 6, the cost for those gross receipt, or you can say the expenditure, has been given over here. Cost of material for exhibition held in South Africa, stationery product, business exhibitions, etc. has been given over here. Mr. Patel of South Africa gave her a check of 5 lakh favoring Gandhi Smarak Trust as donation to the trust. She was requested to hand over the check to the trust office at Ahmedabad. Manisha does not manufacture any of the khadi product. She sources all the khadi material, accessories, products and honey from the supplier of such item. All financial transactions are carried out in account pay check and TDS has been deducted wherever applicable. Yet to understand what is the requirement of the question, her parental grandfather in the Karta of the family HUF, her parental grandfather comes on visit to India 6 months every year since 2014. This HUF is managed outside India and all decisions regarding the HUF are made outside India. So technically this HUF is non-resident. Manisha has opted for the default tax regime under section 115 BAC. So this is the information. From the above information, choose the most appropriate answer to the following question. What is the status of the residential status of HUF in this case? So we all know the residential status of HUF would be, of course, non-resident. Why? Because it has been managed from outside India completely. So if it has been managed from outside India, nothing to check. That is going to be non-resident HUF. So first question we have solved. Determine the taxability of gift received by Manisha from her father, sister, and from her friends in Gandhi Gujarat Seva Samaj for the assessment year 25-26. So, when the gift has been received from a relative, that is going to be non-taxable. So, father, sister included in the definition of relative, and that's because they fall in the definition of relative. So the amount received, that is going to be exempted in the hands of Manisha. Of course, that is not going to be taxed, because in that case technically that is exempted case, what we have just discussed. Clear, students? So first point has been discussed, that is exempted because brother, sister of either of parents would form relative. So in second point, the correct option would be D. 51,000 will be exempted as it is a gift received from a relative. 27,000 received as cash from friend. So up to 50,000, there would not be any taxability in case of monetary gift. And because it is less than 50,000, so of course that 27,000 is also not going to be taxed. So nothing is taxed in respect of 51,000 and 27,000. What would be the total income of Manisha for assessment year 25-26 if she wishes to maximize tax saving? Now, this one is very, very important. Due to only this point, now we have to find out the residential status of Manisha. Now we have to find out the total income of Manisha, and this is to maximize tax saving. That means to minimize tax liability. Same thing. And when you will see the answer to this third point, you will definitely going to learn a new thing in regard of income tax. A very, very interesting point you would come to know when we will solve this point number 3. So before that, we have to see the residential status of Manisha. So we need the information which has been over there. We have to find it out whether Manisha, that was research. and she went outside India. She is unmarried and her parents are living in Ahmedabad. Her parents, grandfather, father, and other family relative in South Africa. She was in India with her parents till May 2020. After then, she went to London for further education. So she went outside India for education purpose. So we will see in this case to find out the residential status. To find out the residential status of Manisha, the basic provision would be applicable because she is coming to India, but she's not residing completely outside India. So both condition would be applicable to find out whether she's a resident or not ordinary resident, or whether she's a resident and ordinary resident. So condition one, that is more than 182 days in previous year. We have to check this. Or condition 2 also is applicable upon her, more than equal to 60 days in previous year plus more than equal to 365 days in 4 preceding previous year. Now I have to see how many days she was in India in this previous year. So she came to India on 1st October 2024. So October 31, November, December, January, February is not a leap year in this year, and March. So total number of days she was in India is 182 days. And because she satisfied first condition, so she would become the resident in India. So initially, she would be a resident in India. And because now she is a resident of India, so now we have to find out whether she is a resident and not ordinary resident, or a resident and ordinary resident in India. For the purpose of this calculation, we have to see whether she is in India for less than 730 days in 7 PPY, or if she is a non-resident for 9 or more preceding previous year out of 10 preceding previous years. So if she fulfill any of these conditions, she would be treated as a resident and not ordinary resident in India. And if she is not able to fulfill any of these conditions, then she would be regarded as a resident and ordinary resident in India. And you will see in the last preceding previous years, if we'll see in previous year 24-25, that was our previous year. Skip that year, the last 7 preceding previous year, that would be 23-24, 22-23, 21-22, 20-21, 19-20, 18-19, 17-18. So out of these 7 years, if you will find out number of days she is studying in India. So for these 3 years, she was in India for full 365 days. For complete 3 years, she was in India. So that would be more than 730 days. And because she is more than 730 days, so this condition could not be fulfilled. And of course, this condition could not also be fulfilled because in these 3 years, she would be a resident. And before that also. So we need someone who is at least 9-year non-resident. And this is not possible because she already fulfilled the condition of being resident in year 17, 18, 18, 19, and 19, 20. So because she is not fulfilling any condition to become a resident and not ordinary resident, so she would be treated as resident and ordinary resident in India. I hope it's clear. So she would be a resident and ordinary resident. Now moving ahead. Correct. Now, because she's a resident and ordinary resident in India, so all kind of income is going to be taxed for her in this case. So the income needs to be taxed in her case We are going to solve that part over here. You'll see the income and the expenses. Both we are going to take over here. So incomes, we are writing down over here, and expenses. So point number 1 was scholarship income. Scholarship is non-taxable. Point number 2 was gross receipt for exhibition, that is 10 lakh rupees, that is going to be taxed in the hands. Then 12 lakh rupees, point number 13. Everything is going to be taxed because she had a status of resident and ordinary resident. Then 1,05,000 receipt. Then as per point number 5, 2,25,000 receipt. Then point number, after point number 5, there was point number 6, which is regarding the gift, which has been exempted. 7 is for regarding the cash gift, that is also exempted. So we can write it down over here. Also, 6 was gift from relative, exempted. Gift less than 50,000 in monetary, exempted. And if you have remembered, share of HUF, also an exempted income. Then from point number 9, there would be expenditure regarding the income she has earned, and those are 12 lakh, then 1 lakh, then 4 lakh, and then 5 lakh 50,000. So after reducing, my net profit would be 7 lakh 75,000 rupees out of the income information which has been provided in the question. That would be 7,75,000. So out of these information, whatever we have solved, now the question arises, what should be her total income? Because she's under default tax regime, so no deduction would be applicable. So this net profit would be the GTI and TI automatically. No other deduction can claim. So this would be my GTI and this would be automatically my total income. So one answer is 7,75,000. But now, because as the question says that you have to calculate income to maximize tax saving, or we can say minimize tax liability. And now in this question, if you will see, there are receipt has been given. The business receipts are, these are the business receipt. And the business receipt in this question is 25 lakh 30,000. So you might be assuming that the correct option should be D because it has been matching with my income which has been given in the question. But this is not the case. If you'll see, there would be a possibility of calculation of profit in this case also, except this 7,75,000. If the question would not have said this, that calculate the total income to maximize tax saving, then the answer would be 7,75,000. But because the question asks you to calculate the income to maximize tax saving or minimize his tax liability, now one extra provision is going to be applicable in this case to calculate his or her total income. Can you guess one more way to calculate her total income in this situation? Any one of you? Gulika, no, correct answer is not D. It's yet to be solved. And this is a kind of question, if that kind of question has been asked in the examination. And if you have not tried this kind of question, I can guarantee more than 95% student going to tick on 7,75,000. And that is our wrong answer. The correct answer is not 7,75,000. So can anyone guess how can we calculate an income which could be lower than 7,75,000? Exactly correct, Gayatri. Presumptive basis. Section 44 AD, Almas is correct. She is doing a business, and in a business, if your gross receipt is up to 2 crore rupees, then you can declare your profit under presumptive taxation basis under section 44AD. And you know, there was a hint regarding it. If you see the information, you will find a point that was exactly for that purpose. This is point number 2. If you'll see, this point actually wants to explain you that something needs to be done in case of section 44AD provision, because all financial transactions are carried out as per account paid check and TDS has been deducted. So under section 44AD, it has been mentioned that all the payment, if has been made via check, then instead of 8%, we can take 6% as your total profit of business if all the payment has been received via account paid check. So as per section 44AD, all payment has been received via check. So we can declare a net profit of that could be 6% of my business receipt. And that would be, very interestingly, that would come 1,51,800 rupees. So now the correct answer is option number C. So there is a very important message for all of you. If in the question it has been asked that calculate the tax to minimize your tax liability or for maximizing your tax saving, then you have to calculate the income or tax via all means as per normal provision via making a P&L, etc. And you have to apply section 44AD or ADA also to calculate the lowest of the tax liability. Suppose if this question, because it is an MCQ, so must have 1 marks question. But suppose if I am going to make this kind of question for 6 marks, a descriptive question, and I have asked you to calculate the total income, then because if you are not going to apply section 44AD provision, that I don't think so you will going to score any good marks in this question. And the student who will apply section 44AD, only that answer would be correct answer, because that would be 1,51,800 rupees. So please write it down anywhere that if in any question, if the question asks you to maximize tax saving or minimize tax liability, then you have to calculate the income as per normal provision. Also need to apply section 44AD or ADA if applicable. That would be the lowest income you have to find it out for minimizing your tax liability. Understood? So that's a very, very important provision for all of you. Deepthi Mehta is asking on query portal 44AD question mark. Deepthi, what does that mean? Question mark. 44AD is PGBP provision, presumptive taxation, and it's applicable on all individual HUF and partnership firm. If your business turnover is not more than 2 crore rupees, then you have an option to declare your profit. That could be 8% or 6% of your receipt. You can declare that profit if you want. But that business should not be an agency business. That should not be a commission-based business. Only in that situation, you can opt for these provisions. These provisions have been discussed in detail in PGBP chapter. So you can refer that. But because the question asked you maximize tax saving, so we have to calculate tax as per normal provision. We have to calculate tax under section presumptive scheme, etc., etc. Okay. So this is a kind of question. There is no other question like this in the whole MTP or RTP, I believe. So very, very important question. Mark this question for your examination, important notes, short notes, wherever you are making, that if the question asks like this, we have to apply 44AD, etc. automatically. Okay. So next, let's see. This was MTP question we have solved. Now, let's solve some case scenario question. Case scenario question number 1. That is regarding again residential status. So Mr. Shashikant, age 45 years, is an Indian citizen and a member of the crew. Citizen and a member of the crew of a Singapore-bound Indian ship engaged in carriage of passengers in international traffic departing from Chennai port on 29th May 2024. So I believe that you must have gone through with the provision of this special cases in which if there are citizen who is a member of an Indian ship, crew member of an Indian ship, in that situation, for finding out the residential status, only first condition is applicable. More than equal to 182 days in India. Only this condition need to be checked. And for finding out whether he is in 182 days in India or not, we have to calculate how many days he is outside India. Generally, we calculate the number of days stay in India, but for crew member, we have to take the total number of days in the year, like 365 or 366. Out of this, we have to reduce number of days he stay outside India. And after reducing it, whatever remaining would be treated as stay in India. And if it is exceeding 182 days, then he is a resident equal to or exceeding 182, he would be a resident or a non-resident. And for calculating how many number of days he is outside India, the special provisions are there. They say the day he entered into the continuous discharge certificate in respect of joining of the ship, from this day till the date of signing off the ship, till the date of discharge certificate of joining. So we have to assume that the number of days stay outside India would be calculated from discharge certificate of joining till the discharge certificate of signing off. So these duration, the discharge certificate of joining till the discharge certificate of signing off, this time would be treated as he's stayed outside India. And balance number of days we will assume as he's stay in India. So from 29th May 2024 till 19th December 2024, we will assume him as he is staying outside India. So how many number of days would be there? Can you calculate and let me know how many number of days he is staying outside India according to this provision? Gulika is saying 205 days. Absolutely right. The number of days he is outside India is 205 days. So the balance number of days he is in India is 160. Correct, Gayatri? Very well done. So the number of days he's staying outside India is 205. So out of 365 days, 205 outside. So 160 days he's in India. And in that situation, he would be called a non-resident. I hope it's clear. He would be a non-resident. Now the question is, first one, what is the residential status of Mr. Shashikant? That would be non-resident. Now they're asking the income, and because he is a non-resident, so in that situation, which income is going to be included in the hands of Mr. Shashikant? Dividend, because non-resident is only two income taxable, arise in India, received in India. So dividend declared by Axe Limited, a Singapore company, the same was received by him in Singapore. That is not going to be taxed, not received, not arise. Agricultural income from land in Pakistan received in India. So because it's received in India, that is going to be taxed. Rent received from house property in Chennai cross. So this is also going to be taxed, but 70% of this going to be taxed because there would be a 30% standard or statutory deduction in respect of rent received. So 2,52,000 and 250. Total income would be 5,02,000. That is going to be taxed in this case. So the correct answer is option number C. Now question 3 is interesting. It says suppose, assume, imagine. Assume for the purpose of answering this question that Mr. Shashikant has transferred his house property in Chennai to his minor married daughter. On 1st April 2025. 4. And his wife is a housewife and does not have any other income. The minor married daughter received the rent from the house property. In such case, what would be his total income for assessment year 25-26 if he has shifted out of the default tax regime? So first income would be remain the same, that was 2,50,000. But the rent received concept would change now. If any individual transfer their house without consideration to the minor child, then generally this individual would be regarded as deemed owner of that house property under section 27 of income from house property. So if you transfer your property without consideration to minor child, you would be treated as the deemed owner of that property. But except in case of minor married daughter. If you transfer that property to minor married daughter, in that case, minor married daughter would remain the owner or the deemed owner. But whatever income she will earn, and because she is minor, only income is going to be clubbed. So remember, if that would have been a minor married son, then you are the owner of property. That individual would be the owner of that property, and there is no clubbing provision applicable. Whole rent would be the part of that individual income. But because minor married daughter case, deemed owner concept does not applicable, but clubbing concept is applicable. So whatever rental income, which was 2,52,000 was the rental income, that is going to be clubbed in the hands of this individual, but there would be an exemption of 1,500 rupees or income clubbed, whichever is lower, because she has shifted out of the default tax regime. So that exemption of 1,500 rupees under section 1032 would be claimed. So the taxability would be 2,50,500. So the total tax liability or the correct answer would be option number A. That would be 500,500. Exactly correct, Miss Gulika. Very nice. Like now, Mr. Shashikant would like to minimize his tax liability as consulted to you. Compute the amount of same for previous year 24-25. Accordingly, his tax liability rounded up would be. So now in this case, you have to calculate tax as per both method. Default tax regime, because question is silent. So when question is silent, you have to calculate tax as per both method or normal provision. So in case of default tax regime, if you calculate tax on income of rupees 5,02,000 rupees, the tax liability would be rounded off 10,500 rupees, including cess, etc. As per normal provision, the tax liability would be 13,420 rupees after round off. So this would be the correct answer, option C. In this case, we are not applying section 44 AD because there is no business income exist. The rental income is there, the dividend income is there. Suppose there is some business income and receipt has been given, then we could apply the 44 AD provision for inclusion of income in this case also. I hope it's clear. Any query, students? So these are case scenarios, very important for the preparation. Case scenario number 2 is also very interesting. We will discuss it, and that is for agricultural income. So in case of agricultural income, I always believe that agricultural income is very important topic for the purpose of calculation of tax. It can change the whole scenario of tax in a single point if that has been given in the question. And generally, what we think when there is information regarding agricultural income in any question, we generally think, okay, this is agricultural income, this is exempt. And if you do this mistake, I personally believe that would be a very dangerous mistake, and it will cut down your marks very, very substantially. So, why and how it can impact your calculation? Look, there is a full calculation question has been given. There is, suppose someone's business income has been given. So there is a profit and loss account as per accounting provision was given in the question. And there is some income from other source. And there is suppose house property definite income information has been given. So suppose it's a 10 marks question, like you need to calculate the total income, etc. and tax liability. And the last line, suppose in the last line it has been mentioned that agricultural income 3 lakh rupees. And if you suppose that this 3 lakhs is exempted, so why do I need to bother about it? That would be a very dangerous mistake. Because if there is agricultural income which is more than 5,000 rupees and you have other income, those are non-agricultural income, which is exceeding basic exemption limit, then you cannot exempt this part, then integration would be automatically applicable. Then tax would not be calculating by exempted agricultural income, and you just need to calculate tax on normal non-agricultural. That would result in the wrong answer. Then integration provision would be applicable, and you have to calculate tax as per step 1, step 2, and then step 3, step minus 1, minus 2. That would be the calculation procedure in case of agricultural income if exist in the question. So please be very attentive regarding the agricultural income information in the question. If there is agricultural income, please focus on that. And suppose what if that agricultural income has been given from coffee beans business or from tea business, then you have to bifurcate it as per the percentage. In case of rubber, it's 35%, 65%. In case of coffee beans, it's 25% and 75%. In case of roasted coffee and tea, it's 60% and 40%. So again, if agriculture income from a composite business has been given, then again you have to apply that, okay, this agriculture income need to be bifurcated, and then I have to solve the question. So integration concept is very, very important for the purpose of examination. If I would be an examiner, I am going to definitely given this information, agriculture income 3 lakh rupees. Because that 3 lakh rupees concept will change whole scenario of the solution. And only that student would be able to solve that kind of question who is very attentive, not in the solution process, but also in the reading concept, that how you read the problem. That is very important, how to understand the question. So if you are in very hurry and you did not notice that line, that agriculture income information is being given, so it is very, very dangerous to solve that question without give importance to that specific information. So let me discuss with you a question of agricultural income. Mr. Kishan is engaged in the following activities on agricultural land situated in India. Total area of land is 5 acres. Activity A, he grows sapling or seeding in a nursery spreading over on 1 acre land, the sale proceed of which is 5 lakh rupees. Cost of plantation is 1 lakh 40,000. Basic operations are not performed for growing sapling or seeding. So can you tell me, is this activity is regarded as agricultural income as per the provision you must have read under agricultural income concept, or is it not an agricultural income? If the basic operations are not performed for growing sapling or seeding. So in case of nursery business, is it exempted or not? Gulika is saying it is agricultural in nursery sapling are exempt. Anyone else? Is nursery business operations are exempted or not? If the basic operations are not performed, is it still exempted or not? What is the correct answer? Gulika is saying exempted. Anyone else? Students, are you sleeping? This is not a time to sleep. You have to wake up. You have to be attentive every time. This is the time to make your future. The best way to predict your future is to create it. So you have to create your future, and that is in your hands. So if you will be really sincere about your studies, if you will be really excited about your studies, if you will be really thinking about the future you always wanted, so you have to be very attentive every time. Gayatri is saying agricultural income. Yes, exactly. So that would be an agricultural income, of course, students, and that is going to be exempted completely. Rama is saying basic operations are not in provisions, so it is exempted according to me. Yes, according to Act, it is also exempted. So it is irrelevant in case of nursery business that basic operations has been carried out or not. So activity A answer is very simple. The first question is also this. What amount of income arising from activity A would constitute agricultural income in the hands of Mr. Kishan? The correct answer would be B. Now moving on to, sorry, not B, it's C. Because it's not asking for, it is asking how much is agricultural income. So the full income would be agricultural income, 3,60,000, because 4 lakh was the 5 lakh was the sale proceed, 140 was the expenditure, so 3,60,000. So question was how much would be agricultural income. So 360 would be agricultural income and it would remain exempt. Activity B is very, very interesting. It could be a separate question of agricultural income. Like this kind of question could be a separate question of agricultural income. And if it has been asked in the examination, that could carry 3 to 4 marks. Now, B grows cotton on 3-acre land. 40% of cotton produce is sold for 4 lakh rupees. The cost of cultivation of which is 2,25,000. Now this cotton does not fall in those three business for which we have a specific percentage like tea, coffee and rubber. Other than that business. So for other than that business, we have to make separate profit and loss account or receipt and payment account to find out the agricultural and non-agricultural activity income. So technically the activity B, 40% part in which there is no non-agricultural operations are involved. So 40% cost produced cotton has been sold for 4 lakh rupees. And the cultivation cost is 2,25,000. So the remaining 1,75,000 would be agricultural income in this case. So tell me this 1,75,000 would be exempted from tax or not? It would be exempted from tax or not? Gulika is saying exempted. No, because there could be integration provision applicability, Almas. So we cannot say this is exempted from tax. We have to find it out what is your non-agricultural income. And if that has been increased from the basic exemption limit, then due to integration, this will also fall under the taxability according to step 1, step 2 or step 3. Okay, but this is agricultural income, 1,75,000. That is from activity B we have calculated. Now the cost of cultivation of balance 60% cotton is 3,37,500 rupees and the market value of the same is 6 lakh rupees. So the balance 60% part has been used for agricultural as well as this is The balance 60% part has been used for agricultural and non-agricultural, because that part has been converted into yarn and yarn has been sold into the market. So for that purpose, we have to bifurcate that out of that activity, how much is agricultural and how much is non-agricultural. So provision says the FMV of agricultural produce needs to be considered as sale. So from the above information, 6 lakh was the FMV of that cotton of 60%, which is utilized for processing of yarn. 6 lakh was the FMV and the cost of cultivation has been given in the question, 3 lakh 37,500 rupees. So the net profit would be from agricultural activity, which could be there if it is not converted into yarn. If this part also sold as cotton, then the net profit would be 2,62,500 rupees. And that would also constitute your agricultural income. So one is this agricultural income in activity B, and this is also agricultural income in activity B. But practically what we did, we actually converted it into yarn and sold into the market. So now the sale is 8,50,000. The FMV, what we take as sale in case of agricultural activity, for non-agricultural activity, we have to consider this as your purchase. There are some processing cost also given. That would be 1 lakh rupees as per question. And the net profit would be 1,50,000 rupees. And this would be non-agricultural activity or income. So the question number 2 was asking what amount of income from activity B will respect to sale of cotton would constitute agricultural income. So there were two income which would be regarded as the agricultural income. That would be option number C would be your correct answer. 175 as agricultural income and 265 as business income. No, that is also agricultural income. Option number A, of course, 1,75,000. The activity B with respect of cotton, only 40% part they were asking. So the 40% part, only 1,75,000 would be your agricultural income. Correct? The option A is correct. Now, activity B with respect of sale of yarn, what amount is agricultural income? So we have seen that would be 2,62,000 as your agricultural income and 150 was the business income as we have calculated in the above example. Now, fourth point, what amount of income arising from activity C? Okay, C we need to discuss. Activity C, land measuring 1 acre is let out to Mr. Ramesh on a monthly rental of 15,000 per month, which is used by Mr. Ramesh as follows. 50% land used for agricultural purpose and 50% land is used for non-agricultural purpose. So does the rent received from the land can constitute your agricultural income? Is it possible or not? Golika is saying yes, because the provisions of agricultural income, section 10(1) says that your agricultural income is exempted if it is as per section 2(1)A definition. 2(1)A says, the first point says that any rent or revenue received from any agricultural land situated in India and used for agricultural purpose would be your agricultural income. So any rent or revenue. So if you have given your land on rent and that has been used for agricultural purpose, then that part is going to be your agricultural income. So 50%, that means 7,500 into 12, 90,000 would be your agricultural income and 90,000 would be your non-agricultural income. Can you tell me the rent of this land is taxable under which head of income? Suppose if I'll ask you, tell me this rental income, if it is going to be taxed, the 50% part of non-agricultural purpose, 90,000 is going to be taxed. So under which head of income this 90,000 is going to be taxed? Who will give the answer? This 90,000 is going to be taxed under which head of income, which is for non-agricultural activity. We have 5 heads of income. Under which head this is going to be taxed? Miss Kavya is saying other sources. Okay. Anyone else? Almas also saying income from other sources. Absolutely correct. Well done. So fourth question was, what amount of income arising from activity C constitute agricultural income or otherwise in the hands of Mr. Kishan? So D point says 90,000 would be the agricultural income and need to be taxed under income from other source. Balance. Compute the gross total income. So out of the above incomes, those are non-agricultural. You can consider them total and that would be your answer. The correct answer would be option A. 1,50,000, the business income, and 90,000, which is for other than agricultural purpose, 2,40,000 would be your agricultural income. So that was case scenario number 2 we have just discussed. Now let me see the third case scenario. And this is for question number, it's a simple question for residential status. Chalo, we will solve this. Ananya Gupta, a citizen of India, lives with her family in New York since the year 2000. So she's a citizen of India. It has been given in the question. But she permanently resides outside India. She visited India from 21st March 2024 to 28th September 2024 to take care of her ailing mother. In the last 4 years, she has been visiting India for 100 days every year to be with her mother. She owns an apartment at New York, which is used as her residence. The expected rent of the house is so and so. Municipal taxes was so and so. She took ownership and possession of her house in New Delhi on 25th March 2024 for self-occupation while she is in India. The municipal valuation is 4,20,000 per annum and the fair rent is 450. She paid property tax of 22,000 to Delhi Municipal Corporation. 10% loan has been taken. This information is more for calculation of income from house property. We are now focusing on her residential status. She has a property in Mumbai also. So technically she is having income. No income from this property because that is self-occupied. She had a house property in Mumbai which she sold on so and so and received arrear of rent of 3 lakh rupees. She does not have any other income. So the Indian source's income is less than 15 lakh, first of all. The question is to, what is the residential status of Ananya Gupta? So we have to solve the first point. Because in this question, you can see she is a citizen of India and comes to India for visit. So only first condition, more than 182 days in India would be applicable. First of all, and if we calculate the number of days she stayed in India from 21st March 24 till 28th September 24, she was in India. So from April 24 till September 24, we have to calculate the number of days. You will see April 30, May 31, June, then July, then August, and then September till 28 she was here. So total number of days would be 181 days. which is less than 182 days in India. So she's not able to fulfill this condition, but there would be one more condition because she's coming to visit India. So there would be a special condition could be applicable if his total income from Indian sources exceeding 15 lakh rupee, which is not in the question. So because total income also does not exceeding 15 lakh rupees. So other special condition also does not apply. Not even deemed resident concept also not be applicable because other income is less than 15 lakh. So she will remain non-resident in this case. Option number D we have to applicable and she would be regarded as a non-resident in this case. I hope it's clear. So student, if there is any query, please ask. We have the next session in which we will discuss the salary concept. And let me tell you, a very interesting salary concept I will discuss with you. There is a kind of salary which is a range-based salary. So I believe you must have know how to solve that question in which salary has been given range-wise. Range-wise salary, you understood? If the salary has been given the question like this, 30,000 dash 2,000 dash 40,000. If this range-based salary has been given and suppose the date of appointment has been given 1st October 2022 and you have to find out the salary for your previous year 24-25, the basic salary, if I'll ask you to calculate as per this information, then you know how to calculate that kind of basic salary or not. So this kind of salary calculation I will discuss with you in the next session in which we will discuss the basic salary and house property revision class. That would be on 14th of November on Children's Day. So Gulika is saying, yes, sir, every year increase by 2,000 till it reaches 40,000. Ishan is also saying, yes, increment till reaching 40,000. Very well done. I expected that answer from a lot of students. But what if I change it like this? This would be the case. Okay, so better we will discuss this case, but there would be a change in this case. So you can easily find out the salary from 1st April 2024 till 31st March 25. And it means that from 1st October, the salary range is 30,000 per month. And exactly after 1 year, that means from 1st October 23, it would be increased by 2,000. So from 1st October 23, it would have been 32,000 per month. And after 1 year, that means from 1st October 24, it would have been 34,000 per month. So till it reaches 40,000, it will increase every year from the date which is given in question, not from 1st April, from the date which has been mentioned over here. Every year the salary need to be increased by 2,000 till it reaches 40,000. Once it reaches to 40,000, then it would be 40,000 per month always. Correct? So according to this information, we can easily find it out that from April 24 till September 24, my salary range would have been 32,000 per month. So from April, May, June, July, August, September, for 6 months, my salary, basic salary would be this. And from October till March 25, it would have been 34,000 per month for next 6 months. So that would be my basic salary. Clear? So this scenario will apply if my salary is due in same month. The work in the month we work, if the salary is due in same month, then that answer would be correct. What if I'll say that the salary is due in next month? From April, I work in April, but my salary due is in May, not in the same month. My salary is due in next month. Then what will happen? Then this will change. And if a single line has been given in the question that suppose salary due in next month, this 6 month calculation would be wrong. And if you will calculate your basic salary according to this, your basic salary would be wrong. And once your basic salary is wrong in the examination, you know, in salary, what will happen? Everything would be wrong. Most of the thing. HRA would be wrong because we need to consider the basic salary. And because basic salary calculation is wrong, no Ishan, due or received, it would not work like this in this scenario. HRA would be wrong, gratuity would be wrong, leave encashment would be wrong, rent-free house would be wrong, provident fund provision would be wrong, as on. So calculation of basic salary is a very important ingredient in a salary question. If anything else goes wrong, like HRA wrong, then only step marking your HRA marks would be deducted. But if basic salary wrong in any case, there would be I don't believe there would be any marks needs to be allotted to you because everything is dependent. Most of the things depend upon basic salary. If once basic salary is wrong in the question, everything is going to be waste effort of us. Okay. So we will see how to calculate basic salary in this due cases in the next case, and other problems of salary and house property would be discussed. Ms. Sunidhi is saying, in the residential status question, why did not we consider March days? In which question you are talking? Because in which question you, because March is not for previous year 24-25, Sunidhi. You must be discussing about the Ananya Gupta case. So she comes on 21st March 24. That is previous year 23-24. And Sundi, we have to find out the number of days for previous year 24-25. That means from 1st April 24 till the day she left India. So March is for last year, preceding year. We did not consider it for 182 days because 182 days limit needs to be checked for our previous year. Understood? Gayatri's whether PDF will be uploaded. If you want, I will upload these PDF of MTP, RTP, etc. So you can download it from the portal. Rama is saying, thank you, sir, teaching about the significance of integration, provision, and agriculture income. You're welcome. Any more queries, student, from your part? Just believe in one thing. One day you will be a CA. One day you will achieve your dreams, your goal in your life. But that one day will come from day one. So there would be day one when you start studying hard, day two, day three, day four, day five. So for that one day, there are multiple number of days we have to work. So do not bother about it. That one day you will be there at one day. If you will use your these day one, day two, day three, day four, day five wisely. So don't stop, work hard. You will be a chartered accountant, I promise you. If you are going through with your full dedication, sacrifices, and hard work, nothing is impossible. You would be a chartered accountant, definitely. So if anything, no, I guess, queries there. So Mr. Bhargav ji, can we close the session? Thank you. Thank you so much.